Tesla announced that they had sold their 200,000th electric car in the UK in March 2024, and I am seeing so many more Teslas on the roads. But why is this happening? One reason that you might not know is that the tax system heavily favours electric cars. And there are two tax breaks that people are using to buy Teslas for much less. I'll explain what they are and how they work in this video. If you're new here, I'm a qualified accountant with over 10 years experience working for some of the leading UK tax practices. Let's start off with the first tax break, which is salary sacrifice. Most of you watching this video will be employees, and many of your employers will offer a salary sacrifice scheme, which allows you to drive an electric car for much less. Under this scheme, you can lease an electric car, but it's your employer who enters the lease. They're the ones who enter the contract hire agreement, and then you pay your employer from your gross salary. So this is very tax efficient because you're paying your employer from your pre-tax income, which means that your income tax and national insurance contributions are reduced because they're calculated on a smaller amount once the lease payment has been taken from your gross salary. Let's illustrate how this works. Let's look at what would happen if you leased a Tesla and didn't go through salary sacrifice first of all. So say that you earned £5,000 a month and you paid tax of around £1,200 on that, leaving you with £3,800 for the month. If you then leased a Tesla for £800, you would be left with £3,000 in your pocket. But then say that you did enter into a salary sacrifice arrangement, you would earn your £5,000. Your £800 lease payment would then be deducted from that, leaving you with £4,200 of taxable income. So your tax would actually be around £900, and you would be left with £3,300 for the month. So under the salary sacrifice arrangement, you're £300 better off because your tax bill was lower. So effectively, you got the Tesla for £500 a month rather than £800 a month. Salary sacrifice is not just for electric cars, but it's much more tax efficient to have an electric car through this scheme. And that's because the car will be seen as a company car, and HMRC will see that as a benefit in kind and they'll tax you on it. And the reason for that is that HMRC see the car as a perk additional to your salary, and that's why they think that they should tax you on that perk. But electric cars have a much lower benefit in kind tax rate than diesel or petrol cars. So if you were to have an electric car through a salary sacrifice scheme, you might pay in the low hundreds in tax, but if you had a petrol or diesel car, you would be more likely to pay thousands of pounds of tax a year for that car. Employers benefit from this as well because they have reduced national insurance contributions because your taxable income as their employee is lower. So if you're looking for a new car and you're considering an electric car, it's worth speaking to your employer first to see if they have a salary sacrifice arrangement. Salary sacrifice is one reason why you'll see so many executives in particular driving Teslas, because they've paid for the lease from their pre-tax income, which is very tax efficient. The benefit in kind tax is very low, and so it just means that a more luxury electric vehicle becomes more affordable. The second tax break is the tax write-off. There's something in the UK tax system called a 100% first year allowance, and it's a tax deduction that allows you to write off the full cost of a brand new unused electric vehicle from your profits before tax if you have a business. And in fact, Tesla specifically mentioned this write-off on their website as a vehicle incentive for purchasing a brand new Tesla. The write-off applies for both people buying the Tesla outright, but also those who enter into monthly lease agreements. And it applies to all electric vehicles, not just Teslas. But again, because the Tesla is seen as a more luxurious electric vehicle, the write-off does make it much more affordable. This write-off has been available since April 2021, and it will continue to be available until March 2025. So if you are looking for a new electric vehicle, you do have have almost a year to use this write-off if you want to. Let's see how this works with an example. Let's say that you're running a business and you make a profit before tax of £200,000. You decide to make the most of the first year allowance and you buy a brand new Tesla Model Y for £50,000. You can only deduct the amount of the car that relates to business use. So say that you use the car 80% for business use, you can deduct £40,000 of the car's value from your £200,000 profit. So you're left with taxable income of £160,000. And then say you are an additional rate taxpayer, you would pay tax on that at 45%. In reality, your effective tax rate might be lower than that, but for ease, in this example, we'll assume that the full $160,000 will be taxed at 45%. So your tax bill will be $72,000. If you hadn't put your Tesla through your business, your tax bill would have been £90,000. So you saved £18,000 of tax by putting the Tesla through your business, and $18,000 as a saving against $50,000 represents a 40% saving on that car, and you would have got it for £32,000. That's clearly a big discount. So if you are looking for a brand new electric vehicle and you have a business, this would be a really tax efficient way to buy it. This tax write-off is available to companies, sole traders, and partnerships. But if you buy the car through your company, then the benefit in kind tax will apply to you as well. Now let's cover off the other factors you need to consider before buying a brand new electric vehicle. These tax benefits apply to all electric vehicles, not just the Tesla, but the two tax breaks that I've spoken about in this video and the fact that many people see Tesla as a more high-end electric vehicle is why I think we're seeing more and more of these cars on the roads, because it makes them more affordable for people to drive. Electric vehicles can be a cheaper option anyway because they're exempt from road tax. The maintenance costs and running costs are also generally cheaper, although feel free to correct me on that if you think I'm wrong. So if you're thinking of getting a new car, you might want to speak to your employer first to see if they offer a salary sacrifice arrangement, or look into the first year allowances if you are a business owner. And it's worth saying that it's not always the best option financially to buy a brand new car, because cars lose most of their value in the first 3 years, and you might not want to be the one who suffers that loss in value. So it may make sense to buy a second-hand car that's 3 years old. Thank you for watching. Give this video a like if you learned anything new. Don't forget to subscribe if you haven't already, and I will see you next week.